The Governor, Philip Lowe, has just released a statement on the monetary policy decision. He talks about the coronavirus having a very major impact on the economy and financial market volatility is very high. He says today they have cut the cash rate to 0.25%. The board will not increase the cash rate target until progress is being made towards full employment, and is confident that inflation will be sustainably within the 2 to 3% target band. It also looks like there is a target for the yield on 3-year Australian government bonds of around 0.25%, and a term funding facility for the banking system with particular support for credit to small and medium-sized businesses. Also, exchange settlement balances at the Reserve Bank will be remunerated at 10 basis points rather than 0. Diana, this sounds like quite a substantial package. Do you think this will be enough to help the economy get back on track?
Look, it will help once the uncertainty of the virus has finished. However, it won't help the virus to go away. It won't help the number of new infections in Australia to reach a peak. The point of stimulus from the central bank and from the government is to help the eventual recovery and also to help the bottom not be so bad. So even though we do think that we're in a recession at the moment, this stimulus is absolutely necessary and it will help Australia not to have a very severe recession. I think that the stimulus is good, but I think that the central bank will probably need to do more. They'll probably need to be purchasing government bonds at a specific rate every month, just like we've seen in the US and in Europe. I don't think that the yield curve target will be enough. Japan has a similar method at the moment and it hasn't really worked that well to lift inflation or growth in the economy there.
Yes, how successful a policy is quantitative easing across the world? I know we haven't done it much in Australia, but it is used overseas. Is it a good policy?
Look, we don't know the counterfactual. A lot of the economies around the world, the US, Europe and Japan, have been using quantitative easing methods for around a decade since the GFC. If we didn't have those measures in place, would unemployment be higher in the US and in Europe? I think it would be. The unemployment rate in the US is at a record low at around 3.5%. I think that some of those benefits are from quantitative easing. So I think, yes, it does work, but it does create distortions in the market. It does push up the prices of share markets and other asset markets as well. So it's not very equitable in that sense.
The Reserve Bank did cut interest rates at the start of this month by 25 basis points, and the big four banks immediately passed that on to customers. Do you think they will pass on today's rate cut to customers as well?
I think that the banks will be under pressure to pass on the full interest rate cut, yes, just like they were in March when the RBA decided to cut the cash rate. And I think that the ultimate reason for that is because the banks and the government know that the Australian household is under a lot of pressure. So I think that, yes, we will see a full pass on to the mortgage rate. And I think that mortgage rates have the potential to go a lot lower, even though the RBA is probably not going to cut the cash rate beyond its current level of 0.25%.
Diana, thank you for joining us.
Thank you so much for having me.